What a pleasant surprise we see from Alibaba stock. It's up actually 14% on the week, even though year to date it's still down 30%. So, what is this recent move upwards? I mean, 14% in a week off of a market cap of like 440 billion still has under a 20 price to earnings ratio, considering that this is a double digit growth stock. So, it's still incredibly cheap on any standard that you could measure cheapness on, including forward PE. It's like a 13 there. So what happened this week? That's what we're going to talk about. We're also going to be revealing my position in Alibaba, as well as other positions such as Charlie Munger's, and why he doubled down on Alibaba, and what I think, where I think China and Alibaba is going into the future. So welcome back to another video. My name is Adam. If you enjoy this video, please be sure to subscribe to the channel, as well as give this video a thumbs up. So first, for my position, I'm actually not doing too well. I just like to show, just for like transparency, down 33% here, close to $800 US. 9% of my portfolio in my TD US TFSA. Again, that's Alibaba. I have 10 shares there. Cost basis was $241. Right now, of course, $161. So yeah, not really nice. A 33% drop is not pleasant at all. And in my Wealthsimple account, I have Alibaba and Baidu. I have 4 shares of Alibaba, down 14% there. Baidu down 8% there, and that's with the increase in 13 or close to 14% this week. So still not doing too well on my Alibaba shares, but I'm a long-term holder, and I think that this stock was cheap when it was trading at $240. So I really like it when it's at, $150, $160. And if you look at the yearly chart, it's almost down like by 50%, almost half its stock price just over the past year. Okay. It used to be over a $300 stock. Then, increasing US-China tensions, as well as the huge crackdown on tech stocks by the autocratic Chinese regime, the Communist Party, made this stock just get absolutely decimated, as well as China axed the IPO of Ant Group, basically made Ant Group split up into 3 separate sections. And so, that's basically what happened with China. And basically, they're not letting these big companies store large amounts of data. They're making sure that wages are better for delivery drivers. They're making sure that this data is available to the Communist Party to use and to other companies to use. So basically eliminating the moat that Alibaba has. However, it's still a fast-growing company, and it still is considered sort of like the Amazon of China. And when you're looking at the revenue, it's earned $109 billion in 2021. So that's nothing to scoff at. So that's like a price to sales of like 25, which is, I think, incredibly cheap considering the year what 2021 was so far. Okay, and they have over 250,000 employees. So this is almost kind of a company you could say is like too big to fail. As well as the Evergrande crisis. If you don't know, this is a big retail company that is at risk of defaulting. That's also put pressure on Chinese stocks and even like the world economy. So basically, and this again, Baidu. This stock is up by 9% over the past week. Even Didi, which is a global ride-sharing company based in the States, is also up 9% in the past week. Basically, the reason why Alibaba shares are surging, and also other Chinese companies, is because President Joe Biden of the US, of course, and President Xi agreed to hold a virtual summit. News that they're sort of like thawing tensions between the US and China. However, I'm not so sure, like based on other evidence, but let's just talk about this first. So on that day, Alibaba was up by 9.3%. So Chinese stocks often are sensitive to geopolitical events, and then news that Biden and Xi will meet later this year could signal a thaw in relations between China and the US. The Trump administration attempted to pressure China via trade war, and Biden seems to want to unwind some tariffs imposed during the Trump years. Additionally, some investors fear Alibaba could be delisted from the US exchanges. The summit could help take that issue off the table. An agenda for the meeting has not been set, but it's also a step in the right direction for improved relations. So that's basically the positive news and why Alibaba stock and other Chinese stock jumped like over 10%. However, on the flip side of that, I was listening to this podcast by The Economist, and I mean, China is also increasing its military pressure on Taiwan. So Taiwan right now is an independent country that's basically backed by the states. And if China attacks Taiwan, and if it seems like they're putting increased military pressure on Taiwan, then this could lead Taiwan to retaliate and attack some of the fighter jets back. And it could also lead to a step in the opposite direction if the US gets involved, and the US most likely will get involved because it doesn't want to look like it's weak and just sort of step down from military conflict with China. But basically last week, China sent about 150 warplanes into Taiwan's air defense identification zone in a massive escalation of its military activity directed towards the island. This is maybe in response to AUKUS, which is basically the partnership between Britain, Australia, and the US to create nuclear-powered submarines in a contract that was worth like tens of billions of dollars. And that's like contains some of the most sensitive information of US military and British military strategy and especially tech when it comes to nuclear submarines. So that was a huge deal. So this could be China's sort of response, is increasing pressure against Taiwan. So basically it shows a change in the makeup of the PLA Air Force missions. Surveillance aircraft were the most frequently sent. The balance has now tipped to see fighter jets dominate. So the use of bombers capable of carrying nuclear weapons has also increased. Speculation is growing that China will try to mount an invasion. Estimates range from within a few years to decades. So again, it's incredibly risky to own Chinese stocks because, I mean, you can imagine what war would do. I mean, definitely, I would think that shares in Alibaba would get delisted if there is a war between China and the U.S. So it is kind of risky, and I mean, seeing that there's an escalation between fighter jets in Taiwan's airspace, that's kind of tough. Also, Charlie Munger doubled down on Alibaba. His share position increased since August, I think, by 83%. So basically that means he almost doubled his position in Alibaba since the summer of last year. So it disclosed that it bought more shares of the Chinese giant Alibaba with its corporate cash. And of course, Charlie Munger is Warren Buffett's partner and Berkshire Hathaway vice chairman. So pretty much, since the filing, the Daily Journal disclosed that its stake in Alibaba had risen from 165,000 shares to 302,000 shares at the end of Q3. That's an 83% increase. During that time, Alibaba stock was down by 40% and a whopping 56.3% from all-time highs set back in 2020. So that's a huge decrease. And of course, Munger is a value investor. And so if he believed that Alibaba was cheap back in April when it was at like $240 per share, he would have loved it now at $160 per share. So should you follow Charlie Munger? Well, on the bullish side, Alibaba is the leading player in Chinese e-commerce, payments, and fintech, and the cloud. And its cloud computing system is something that I'm incredibly bullish on, and I think could be the main driver of growth in the future. With an entrenched position in these three high growth areas, and given that Munger is known to be bullish on the long-term growth prospects of China and its rising middle class, it seems a pretty safe bet that Alibaba should grow in the years ahead. And if you're looking at, this is the interactive chart, but if you're looking at the growth in 2022, it's projected that to grow 27%. And in 2023, projected to grow 19% based off of 43 analysts covering Alibaba. And this year, it's expected to, or this next quarter in the whole year, it's expected to grow year over year 25%. So that will be huge, right? Growing double digits. I mean, that's really, really good for something like Alibaba, especially considering the very low price and forward price earnings multiple. Basically, when the IPO of Alibaba subsidiary Ant Financial was stopped by regulators and its stock fell, Munger swooped in, buying shares when Alibaba's PE ratio fell to the high 20s. It also had about $135 billion in net cash and other investments in other companies at the time, so the core business was actually much cheaper than that. And Alibaba had also several promising but loss-making subsidiaries, such as its cloud computing platform, which right now is actually profitable. Okay, it's not loss-making anymore. Over the summer, Alibaba's valuation has fallen all the way to just 17.3 times trailing earnings. That's incredibly cheap. But again, considering Alibaba's huge cash holdings and investments, as well as the loss-making business segments, and even with all the negativity, analysts still estimate future growth is sort of are more muted. Based on 2023 estimates, Alibaba trades only at 13.3 times earnings. So that's really, really cheap. And then the bearish case, and Munger may have misjudged the extent to which the Communist Party would continue to punish Alibaba and other Chinese tech giants. They levied a 2.8 billion fine for violating anti-monopoly rules in e-commerce back in April. Regulators have continued to issue regulations on delivery worker pay, as well as restrictions on data collection, which could broadly affect Alibaba's portfolio of businesses. It also broke up Ant Financial, effectively knocking down the company's moat against rivals. Even on the core business, recent regulations could open Alibaba's main cash cow e-commerce business to more fierce competition. So this all could basically lower its revenue. And they, headline revenue grew at 30-40%. Outside of a large acquisition, revenue grew just 22%, which is still a pretty solid raise, but not as much as would be expected. As well as recent troubles on Evergrande, the real estate developer, may still spill over into the broader Chinese economy. That could affect the Chinese consumer, which means less buying power and lower revenue for Alibaba. So again, this just talks about, there's like risk and reward for buying shares in Alibaba. I think it's incredibly cheap, and that's why I'm still owning shares and doubling down in my position, just as Charlie Munger is doing. But this is a long-term hold for me. This is a very long-term play. And I mean, I'm looking in the next 1, 2, 3, 4, 5 years, also taking into account sort of the tensions between China and Taiwan. And I might consider getting out once I make a decent amount on the stock. So that's what I have to say. Basically, again, market cap 440 billion, price to earnings ratio of 19. Let's look at some stats. In the meantime, let's just check out the stock price. This is the 1-year chart. It's just absolutely decimated, right? And just this little spike here, this little move upwards is like the 14% move in the week. I mean, it's finally having a respite from just getting absolutely beaten down like a dog. And it bottomed out like under $140 per share, $139.6 a share. And finally, we're seeing some positive momentum here. And let's just see how long it goes. It's been riding the lower Bollinger Band, which is basically 2 standard deviations below the 21-day moving average. And finally is starting to sort of come up against the upper Bollinger Band here. So hopefully this is a turnaround play. And again, I'm just going to be holding my shares because I believe in Alibaba for the long term. If you're looking at some stats, forward PE of 15. Forward PE of 15, that's incredibly cheap, guys, for a stock that's growing at and expected to grow at like 30-20% into the next couple of years. So a lot of people are excited about Alibaba. A lot of people have lost a lot of money, and even companies such as Cathie Wood's ARK Invest have been selling based on the increasing tensions and the regulation in China. But I think, again, it's in China's best interest to sort of have these players push and basically make as much money and grow and make China's economy even better, okay? Because this is not a good look on China as well. So that's all I have to say. There's common prosperity things, but at the end of the day, I like Alibaba. I really like the stock. Let me know what you think. Cheers, guys, and I hope you have a fantastic night. And I'd love it if you join the Discord. It's totally free. Link is down below. Have a fantastic weekend. Let me know what your thoughts are on Alibaba down below in the comment section. And don't forget to subscribe and like. Cheers.